Welcome to this episode of Raising Capital Australia, the podcast and YouTube show. I'm your host, James Tuckerman. Now, if you haven't done so yet, make sure that you hit subscribe so that you never miss an episode. Or if you're listening to this or watching this on your phone, and if you have never given us a review before, please take a minute to do just that. You'll be helping other people find this show, adding juice to the algorithms, and you'll be helping us more than you may ever know. This episode is proudly brought to you by the B2B-Podcast Network. If you are a B2B business owner, B2B-.io helps you automate over 90% of the client journey via one super sweet platform. It's a funnel builder, it's a sales pipeline, it's a CRM, all in one. Use it to get more B2B clients and keep them forever. Now, today I have as my guest Steve Torso, who is the co-founder and managing director of the massive capital raising platform Wholesale Investor. It showcases private, pre-IPO and ASX listed companies to over 31,000 high net worth investors and professional investors. He is a regular contributor to media in the private equity space, including the AFR, BRW, Sydney Morning Herald, Startup, Smart Company, Sky Business, and now the Anthill Capital Raising Podcast. Steve, how are you?
I'm good, James. How are you, mate?
Fantastic. Now, how long have we known each other for?
Mate, a long time. I actually remember my very first, when I was first starting, I was thinking about doing my first advertising because I looked around and thought, where can I promote my business to go out to companies that may look to raise capital? And at that time, you were the pioneer as far as providing media related to startups, right? Before startups was popular, before there was massive amounts of, like at that time, just to give context, VCs were being funded by the government when you were actually launched, when you were doing yours. So we're talking 13, 14 years.
An entrepreneur was a dirty word. You couldn't say, correct, I'm an entrepreneur or I back entrepreneurs. An entrepreneur was like a dodgy property investor in the...
People would ask me what I do and I'd say, oh, we work with sort of venture companies, startups, and then they're just looking at your blank face. And it's like, do you know how Google used to be a small company and you try and explain it? It's like, people didn't quite understand the startup concept. It's
so crazy. Now, also as well, too, you've raised money for your business. So correct, that's really interesting. And now you're helping other people. So we're going to learn a lot from Steve today. But one of the things that I always love to hear is the origin stories. How did you fall in to Wholesale Investor and the whole capital raising space?
So it started where my background is marketing. I love marketing. It was my sort of first love. And then around sort of 2006, I got introduced to corporate advisory and capital raising. And at that same, and I've known my sort of co-founder was Ruben Buchanan. We'd known each other for some time. We sort of had this thought that there must be a better way about going about it because there was no real centralized sort of database of investors, right? Where it was basically just every person going out to their network of 80 to 100 people, promoting their opportunities and seeing if they could get a capital raiser. So it was all about who do you know is how the space was actually driven. So we thought there must be a way to centralize that and give companies, like curate the opportunities so that we could then promote them, to that sort of high net worth investor list.
And we're thinking, cast your mind back. This is 2006. Whereas, I mean,
the actual launch was 2008, but that was 2006 was when I started the sort of corporate advisory.
Yeah. But if you think about it, I mean, the internet at that time was, half the houses in Australia would have had like the dial-up modem, the whole bit.
We launched as a magazine, to give you a clue.
Yeah, I was running a magazine. That's right. And you launched a magazine as well. Yeah, that's right. Correct. You did too. Launching a magazine. Well, tell me about those humble beginnings. So at the beginning, it was a magazine with investment opportunities that you would give to investors. Am I
correct?
Right?
And I think the key was we were very fortunate that Ruben had a database because he also launched Wealth Creator magazine, and there was a database that sort of started with that. And what we did as a bit of a strategic move was we thought, you know what, we'll basically send the magazine to sort of legal, accounting, private equity, venture capital firms, etc. because effectively it's almost like what used to be the sort of magazine for the hairdressers. We thought,
Yeah.
whilst people are in their waiting rooms waiting for their meeting, this could be something that they could actually watch. So read whilst I wait. So that was the magazine was effectively our branding tool as a starting point. And that was really the start. I remember we had about a sort of 1,000 to 2,000 to start with. We quickly grew to sort of 5,000. I remember sort of you wrote the best email promotion at that time. And I was like, geez, he's good at marketing, right? Because it's very rare. When you come across someone who's really good at copy. And I was like, James is good. And I remember doing that first promotion with you, and I was super impressed about how many people responded and all that sort of stuff. But the key aspect is that we branded ourselves specifically, and the Wholesale Investor name tied ourselves to high net worths, which was really, which was really helpful.
And you've raised money on your own. So in the beginning, it was a print magazine. Now it's a really sophisticated online platform with all sorts of different facets. According to my notes, you raised 3 rounds of capital, 2 mil, 2 mil, 1.5 mil.
Yes.
Can you retell that journey? Where did the first 2 million come from, and what was that spent on?
So the first 2 million was actually, we weren't technically raising capital at that time, but we had Investec actually turn up to one of our events, and at that time, by habit, our business development guys would basically contact investors just to go and build relationships. And Investec sort of said, look, come out to our office. We want to meet you. So they went and met my BD team. And then after they met with Investec, they said, look, we want to meet your CEO, and we want to introduce him to our boss. So that's when I met Hein, who now runs Touch Ventures, which is the Afterpay Ventures group. And it sort of all went from there. So they realized a lot of companies that we had them sort of 1 to 2 years before they started sort of getting on their radar. And of course, for investment bankers, early access is of interest. And that's sort of that first 2 million. It was a 12-month journey. It was the most emotional, wild roller coaster that I'd experienced to that point. And you think to yourself, how could you go through an emotional roller coaster with someone wanting to give you $2 million? And it doesn't sound like a lot now. At that time, $2 million was substantial.
Big lot of money. Particularly,
Correct.
That would have been considered like seed or Series A, probably.
It's technically our Series A.
Yeah.
We didn't actually really do a seed round now, I think. But look, that journey, I think it's important people realize, is when an institutional investor or a professional investor comes in, like you do go through, like there's layers to it, right? First, you got to get through it. Firstly, they've got to be interested for the meeting. And I know there's all stats on it, but secondly, when you go through that term sheet process, I said it was a 12-month journey, and I found that I wasn't ready for it. And even after, being in this space for 8 years up until that point, I really didn't know what the capital raising. I knew how to promote companies that were raising capital, but I didn't know the capital raising process. It's like being really good at marketing, but not knowing how to run a business, if that makes sense.
Yeah. Which is a lot different to the way you are now, because I mean, like Wholesale Investors are a fairly, it's a very well-rounded business in terms of the way that it supports its people.
We've we basically, and we're still innovating as a company. Like we've gone through our iterations of it. Went from magazine. Then we went to sort of online to offline, because obviously there's a strong offline aspect that comes with typically capital raising. And then COVID comes. And just to give context on the offline side, in 2018, we did 48 events across 7 different countries, showcase events. So we showcase companies across, and I was like, almost killed myself that year. And we made the conscious habit of, do you know what? Now is the time to start transforming to being a purely online business. But you realize you can't cut off the nose to spite your face, right? No. So you have to go through it's like a multi-year transition to go through that. And that's COVID's, I suppose, really helped sort of speed that up, because you actually had no choice.
It's been a massive accelerator. It's been a massive accelerator in our industry. Yeah, but I can't imagine 2018, 48 events in 1 year. That's pretty much one a week for every week that's not a holiday. And then everything has to go online. Amazing. What years did you raise 2 million and 1.5?
So we did the first round was 2016 with Investec, and then in 2019 I also did another. I did another sort of small. I did the start of a raise, and then 2020 I basically finished that. So it was really across two parts. Was that sort of 2 million, and then last year another 1.5.
So where did all that money coming from? The first was at Investec, and incidentally, it's worthwhile mentioning that is an example of smart money. It's not like family and friends. It's not like, angels. It is
that's on balance sheet investment bank investment.
Yeah, and they're looking for something more than just an ROI on their money. They're looking for an opportunity to partner and generate lead flow and all that other stuff. Where did the 2019 and the 2020 money come from?
High net worths. So
high net worths.
Pretty much the majority of the money after that has been really high net worths, and also another Canadian VC has also joined the register. And via a secondary sale, we also had BMYG, which is another sort of Melbourne-based VC, also joined the register.
Oh my goodness, I was just writing a note down, then I forgot exactly what I was going to say.
Well,
That's what I was going to say. Was there a preferred mechanism that you use to raise that money? There's a lot of talk about convertible notes and safes and all this other stuff at this moment. Was there anything special or interesting that you did?
No, I just did a straight equity raise. I think what was interesting for me is 2019 was the actual first time I went out to my own database to raise money. Previously, previously I hadn't done it. I actually resisted it for a really long time, but I thought, you know what? Now's the time. And so I did do that. And I was in this really awkward spot because we were building CRISP at the time. And CRISP stands for Capital Raising Intelligent Investment Secondary Platform. So I wanted to transform the way people think about capital raising. And I wanted to turn it from this mysterious dark art, whereas to where do you go, how do you do it, into a science and process. Because I learned really going in 2019 when I sat there and thought, I need to raise money. I thought, what do I actually do? Like, what's my first step? What's the process? The structuring of the pitch deck, what's most important to investors? Because my business was slightly different. So the metrics that I typically look for in a SaaS, and we weren't technically a SaaS business at that time, none of it was relevant. So I had to figure all this out. But effectively then what I decided to do was all those things that I was questioning, I thought I've got the capacity to turn that into software that can make it easier for me to manage my own raise sort of going forward. So all this, like, I think the hardest part for if you think about a company going to a capital raise, first you got to figure out who you're going to approach and how and who's going to be relevant to your deal. Because not just because someone's got money, it doesn't mean they're going to be an investor in your business, right?
Yeah, they've got different interests, they've got different ambitions, they're not the right fit.
Correct. And then you've got to think to yourself, well, there's a massive time consumption that comes with capital raising. So how do you remove all the inefficiencies in that time process? Because ultimately, when you go on cap raising, you're answering the exact same question over and over again. So you thought about how do you remove that? Then it's like, how do you target investors that are most, they call it, relevant to your business, that have got a thesis that relates to you? And then how do you remove that friction for them to become an investor? So time, you learn two things when you're raising money. There's two things that kill deals: time and lawyers, right? No lawyer will like to hear that, but if you've got a big enough transaction and there's lawyers involved, but if you're just raising private personal money, it's typically time. So if you're getting asked a bunch of questions and you're taking 2, 3, 5 weeks to get back with those answers, you're killing the deal without knowing.
Yeah. So CRISP is spelled CRIISP. And guys and gals, it's a .io. So if you want to go check it out, CRISP, CRIISP.io to help manage the process. Now, for you, I'd like to know, what did you think was going to be was there a bit that you thought was going to be easy and it worked out to be surprisingly hard?
I was fortunate enough that I've been in this space long enough to know it's not going to be easy. But to answer that question, I know most founders approach this process and they think that it's easy. And the answer is it's not. What was surprising for me was just how much opportunity cost there is in the capital raising process. Like, when I look back at that 2019 raise, I realized that when I took out the time it took me to raise that money, and it was a smaller amount at that time, and how much time I spent on it, the revenue cost was much higher than what I expect. And actually, in the Investec transaction, my first meeting with Investec after they actually became an investor was letting them know that we have a revenue drop of like 29% or something ridiculous like that. And I was freaking out because we hadn't performed, but it was really because I was so tied up via this process. And the first thing they said was that because of us? And I was like,
yeah.
Well, yes. And it's known in VC land that this process for raising money impacts businesses.
Yeah. Was there a bit that things happened in a surprisingly easy way? Were there any of those moments where something fell into place and you didn't expect it to be as easy as it was?
Yeah, I would say, I'd never say it's as easy as what it was, but I'd say the last raise was the most straightforward, but that's because I did things right. The last raise was straightforward because I didn't actually need to email the database. I only communicated with people that had previously expressed interest and existing shareholders. And the simple thing I learned, James, and I know it sounds straightforward, but I spend a lot of time, I try and communicate with potential investors once a month, updating on progress and milestones, or even updates on product videos, or 6 monthly updates on what we're doing. So effectively, by the time it came to raise money, they were already sort of well-versed in all the different milestones we'd hit. So if you look at, if I think about the mistake I made previously was just lack of communication, whereas now I try and communicate as much as possible, both the good things and also the challenges. So that way, when it comes time to raise money, they already feel comfortable with the story. They feel comfortable with where they're at. And in their minds, they've more than likely made a decision, yes or no, before we've even had a chat.
So let's go right back there. So, I mean, like, you're in a fortunate position because you'd spent a decade cultivating a list. And it is funny that you felt awkward or anxious reaching out to your own list. And I can completely understand that. It's so funny. It's strange.
Very awkward.
I don't know what it is, but the reality is that these are your fans and these are your advocates, and these are people who are most likely to jump in. So for you, did you reach out, and then anyone that came back and engaged with you, they became sort of a hot list or an interest list or a warm list, and that became the audience that you continue to engage with?
Yeah, correct. So one of the elements, so investor relations is a big feature, right? So one of the elements we made is anytime someone expressed interest, we invite them into, call it our deal room. I definitely have to come up with a much more interesting name than a deal room.
No, that's a good room. I like, that's a good, it says what it is. It's the biscuit tin. In this tin, there are biscuits. People get it. The deal room. I love it.
And then we added an investor relations feature to it so that we could communicate directly from the platform. So effectively, I knew straight away that was going to be my tool for communications going forward, because then I have full, how can I say it? Typically, when you're raising money, you actually have I know you've been through a couple of capital raises, right? So ask yourself, so if you think back to when you did your raises, what did you actually know about what investors wanted in your company?
Oh, nothing.
You don't.
Yeah.
So now I've got data on it, right? And then the other part is when an investor expresses it, what do you know what they've actually looked at for your information or what's of interest to them? And it's not that the goal is to not manipulate. The goal is to help them come to the fastest yes or no decision possible, right? Because if you can help them come to a fast yes or no decision, they realize that they know that you're a professional in the way in which you approach it. And
you're not wasting their time.
Correct.
And you're setting things up so they don't waste your time. For these dollar figures, obviously 2 million was one big partner. The first 2 million. The further rounds, was it groups of people? What would be the smallest amount? What would be the biggest amount?
So the smallest amount was a 25K amount. That was just because there was someone that I was really close to, knew really well, and actually they were smart money. Technically, they were very smart money. Have added a lot of value. And then typically you should expect from private investors anywhere between 25 to 250K.
Yeah. So yeah, and it's not overwhelming. There's not too many people. You won't go broke because of the lawyers, because there's only a handful. So you started with your own database, and you've also got the platform that's helped you manage things, make things a lot easier for you. When somebody comes into your world and they go, Steve, I want to raise some money, you mentioned the process. What are some of the steps or stages that you highly recommend somebody else do when they come into your world?
So we've got a four-stage process that we sort of educate on. One is, the first step is to get ready. Because as I said, the last thing is you want to be doing is delaying the time it takes to get investors information. So that's your pitch deck, your document, your term sheet, your unit metrics, whether it be whatever relevant financial information you want to share for those sort of intro chats. Just get that ready, right? Because if someone does want to go further, you want to make sure it's literally the click of a button and they've got access to the information. And like the mistake I made with Investec, it took me 2 months to get ready, to get all the information in alignment for them. So get ready is important. Stay ready. So it's just, once you're ready, it's much easier just to keep things updated rather than sort of doing it all again every time you go down go down to your next capital raise. Number 3, you're going to love this one, James.
Okay.
Always be raising.
Yeah.
You've got a couple different names. I call it always be raising because anyone that's ever done any sales always remembers always be closing.
Yep. Alec Baldwin from Glen Ross.
In the UK, they're referred to as the agile capital raising method. I find this really works for me, and I think I highly recommend it because what you're doing is you're keeping yourself in this always on state, but you just incorporate it into your daily life. So for me, I'm trying to have a conversation with a shareholder or a potential investor at least once a day.
Wow.
30 minutes of my day, doesn't consume too much time, doesn't take me out of my business, doesn't impact revenue, good for my ideas, good for my thinking, all that sort of stuff, rather than locking yourself away from your entire team for 3 to 4 months to go through a capital raise, right? Which is what most people do.
Mm-hmm.
And then the last one, most important, get to the fastest yes or no possible.
Yeah, I've heard some good questions. So for example, questions to ask. So for example, I was listening to a guy called Dan Martell, and he has this question, which is, so if you were interested in investing, what dollar figure is the amount that you typically invest? And it's a really interesting thing because then someone, you can figure out whether they're serious or not. They turn around, they say $250,000 every time.
Correct.
Or they say, oh, I haven't really done it before. Or, I don't know, maybe whatever. And then you don't know.
I would ask that second, right? The first question I would ask is, I'd probably ask 2 questions before is, how are you involved in my area, right? So if you think about an investor's mind, they've got a thesis as to why they're interested in you. They've got a thesis about your space. They've got a thesis about your opportunity, right? So for me, I want to understand what their background is, right, as to why they're in front of me. Then secondly, I want to understand is, what do they understand about the problem I'm solving? Because if we've got alignment of thesis, you can then make a scenario as far as how the conversation. So for example, when I have a family office say to me, Steve, I don't see the problem you're solving. Like, if you've got a good business, you can just go to Goldman's and raise money. That's not my investor, right? Because anyone that thinks that it's easy to get Goldman's as your banker to go and raise money for you is operating in a different world to what I am. And there's nothing I can say, and I don't want to waste that time to try and educate, right? Then after that, if they say along the lines, well, I've watched a few of my investee companies, they've struggled with raising money. I see how hard it is to attract investors. I see how time consuming it is. I see how it takes them out of their business. I know that that's a good conversation for me. And then after that, I typically would ask, so when you invest into private companies, what's your normal check size that you're typically investing?
Yeah.
So that would be the other way.
Yeah, that's a great way of framing it. I love podcasts because we can record them and we can hear exactly the type of things that trip off the tongues of people that have done this before. Now, when you were talking about your 4 stages, I missed number 2. Number 1 was
stay ready. Number 2 is stay ready. So get ready and then stay ready. Stay ready.
Yeah. And right, so that's when you're making sure that you've got the pieces and you're just adding to it and adding to it and adding to it. Now, the first piece, which is the materials. Now, you just rattle off a couple different things that you would recommend that somebody have in their arsenal of materials? The pitch deck, everybody knows. Got to have a pitch deck. Quickly, any rules of thumb about pitch deck or size of pitch deck? Or
no, there's just, I know everyone's got their different ones. Mine's probably longer than what most, but we are going to be raising more money. There is some good templates online. We provide our clients with a template. Just follow those templates. I found, like, we've even structured Crisp to follow templates that we've found just to simplify it. So find a template, use it, because effectively it's being created by someone else that's gone through that process over and over again. Yeah,
there seems to be some universal themes, being able to, have a clear narrative and tell a story. But starting off with the problem and the audience and all the other important stuff. So pitch deck is important, but there were some other things that you said as well too. You just rattled them off. What were some of the other things that you think that a business should
term sheet
have? Yep.
Term sheet, I think, is important. One that no one really talks about is that, as I said, you're frequently asked questions. I think that's important because you're going to get asked the exact same questions over and over again. So if you can have that straight from the start and you're answering those questions in advance, it saves you answering it, right?
Yeah.
But also it means that you're not answering it different every time. You've got a standard answer and it's going to investors every time they ask.
It's great that you said that. I've spoken to a bunch of people since I started recording episodes for this podcast, and that is not one thing that I've heard. But when you say it, the marketing brain in me goes, that makes absolute total sense.
Well, after this podcast, James, I'll show you a demo and you'll get what I mean, why it's important.
Yeah, right. Excellent. Cool. So pitch deck, term sheet, FAQs. I think that you mentioned unit metrics. What would be some examples of unit metrics?
So especially for SaaS businesses, the simple things, obviously, like your customer acquisition costs, if you've got revenue, lifetime value of customer, even just your average sale, I think is important to sort of note. Simple metrics like that is always helpful. The other metrics to look for is, like, we've broken it down to, we've got a theme inside. We've made this up, right? And you'll appreciate this as a marketer. It's your capital raising brand elements, right? So the things that an investor can identify within seconds when they hear it. So for example, if I mention that I've got SaaS metrics of, a 4-to-1 sort of, lifetime value to CAC, to CAC ratio, that means something to an investor. If I've got growth of 50% plus per year, year on year, that means something to a certain investor. If I've got 10% month on month, that means, so that's the metrics part. You've also got other things like shareholders. Like when I mention Investec's a shareholder, that means something to an investor because someone else has come and done the due diligence and then decided to invest. With your business, you're a B2B operation, right? So when you're promoting your capital raise, you want to be mentioning the highest profile B2B names that you can possibly mention as your clients, along with the metrics as well, because it shows product market fit, that they've done let's call it the procurement on your service, and they've also decided to use it as well. And testimonials obviously are also really helpful for that, or Trustpilot scores or what. They're things that relate to traction and metrics. And then also the investor part. Board members, people that have got that, been there, done that experience, that can show that they've built a business, successfully exited, or been involved in high profile growth companies, etc., is really helpful.
Just pause on that one for a moment. Board members and advisory board members. At what point do you think that you should start to surround yourself with some names? And how would you remunerate the people that you might be bringing in? Because these people bring credibility. It's not just expertise, it's the credibility.
So as soon as you move out of the friends, family, fans, not fools, friends, family, fans area, I think that's when you need to, because if you're dealing with friends, I've got these 5 stages of relationships, right? And the level 5 stage is someone that you've known, and like I've known you for 10 plus years, right? If we've actually made money together, then I've got a linking to you in that we've done business together, we've made money together. If you're recommending something to me, I trust it. Like if you recommend something to me marketing related, how do I not trust it, right? That's your area, that's your spot, or even just B2B growth related, etc. So as soon as you go outside of that, then you need to bring in some externals, because that adds credibility. And you want that factor of, remember, we've only ever got seconds to capture someone's attention.
Yeah.
So when they're looking at your advisory board, they in their minds need to say, that's interesting. Because an idea just isn't enough anymore. An idea is one part, but you need those other parts which need their brain to tick over to say, that's interesting. Could be growth rate, could be board members, could be shareholders, could be the sector that you're in, you know, whatever it is, leverage it.
Yeah, that's interesting. Now, so you mentioned before that I'd raised money. I only raised money once. And overall, I raised $725,000 many moons ago. But part of that process for me is that I began to amass what I was just calling advisors. And because I was young, I mean, like I was like 25 or 26 or something, you can get away with a lot of stuff when you're 25, 26. And I would just go out to people who were smart and had a lot of money. And I would say, hey, do you want to be an advisor of my business? And a couple of people said, yeah. And then they ended up becoming investors. How would you go about surrounding yourself with advisors or even official board members, particularly at the beginning when you might not have many runs on the board?
Well, look, ultimately, they've got to express interest. So I think, so firstly, if you can't pay them in cash, equity is obviously can be appealing for them. Exactly what you negotiate with that's sort of up to you. Everyone has different sort of thoughts on what amounts that is. But effectively, you've got to, like, it's hard to sell a secret. So you've got to somehow make yourself visible enough so that you can actually get the attention. Or if you've got people that already know, like, trust, respect you, that want to, you know, that could potentially be involved, then approach them. But it's the only two parts, you know, it's the manufacturing of serendipity, right? Making yourself visible to attract the right person at the right time, you know, in the right place and so forth, or your existing networks.
Yeah. Let's go back to Wholesale Investor. Tell me how the whole process works, because it has evolved a fair amount since releasing a magazine with a whole bunch of deals in it and passing that around. How does the whole business work now?
So for us, we were very important that we wanted to move to a subscription-based model, because obviously this industry, everyone's trying to get success fees from companies. And for us, if you look at every successful B2B tech business, they obviously do have a subscription model attached to it. So we thought we want to bring a subscription model to it. And we've obviously aggregated one side, which is the investor aspect. And then obviously our productization part is on the company side, right? So they obviously buy our services. And really the way we thought about the product is, I just don't want to work with you for 1 year. I want to work with a company for 5-7 years to go through the journey, because the reality is raising capital, like everyone, we all believe that we're amazing enough that we're going to raise capital in 3 months, but it just doesn't work like that. You know, it typically takes 6-12 months. But really, I found, even if I look at my cap table now, like 2019, like you see a growth in the ability to raise money, just because I've been that consistently providing updates. So you've got to remember that the investor you're going after, they're not sitting there just waiting to throw money at you. They want to see who's achieving milestones, who's successfully executing, right? And if you can demonstrate that, that's when you win the right to have someone want to invest in your business, because none of us are entitled to. So that's where none of us are entitled to raise money. We've all got to win that right for someone to want to invest into our business. So we've really thought about how we can sort of remove as much friction as possible. But the part that we can't do is the business performance part. Like, the company still has to perform. And as I said, an idea these days is just not good enough. Like, there has to be traction metrics involved that shows that you can execute.
So if someone comes into your world, obviously they're going to get a little bit of guidance and support about what they need to do in terms of the 4 stages. If they tick the right boxes, that is when you form a more formal commercial relationship. And I'm sure there's layers and levels to that. Like, one might be just the technology platform.
Yeah.
Another level might be advisory. And then we've got road shows and other next level support.
Yeah, so you've obviously got the software and technology part, and then obviously the promotional aspect. We technically don't do advisory. It's more sort of more guidance. Like we just do our best to provide templates. We do our best to provide examples of what other clients have done that's been successful for them. And then we also help them engage their existing, because everyone comes to us, they want to get access to our database. Fantastic. The other part we try and help them realize is that utilizing the software, they can also basically work on their existing investors that have previously registered, that previously expressed interest for. Because what most people do is they get interest from an investor and then they get a rejection, never communicate with them again.
Yeah, and their circumstances may have changed.
Correct.
We teach that in the sales and marketing space. You know, you get 100 leads, right? 30 of those leads are never going to be the right fit anyway. But of those 100 leads, you end up with like 3 clients. 30 are not going to be a fit. And that leaves 67 that you can follow up at some point. And most people don't. They're too busy looking for the next opportunity. So we talk about, you know, in sales and marketing, network reactivation. I can see that it's equally applicable in capital raising. Stay in touch.
There's always more people watching you than what you would ever know. It's like, even if you look at you, James, you've obviously been in this space for quite a long time, right? People will know you and they'll be observing what you're doing. Pardon?
We both had hair. Steve and I, we both had hair.
Exactly. That's what I mean. People have known us for some time. So it's like you don't know how many people are still been following what you're doing and have great respect for what you've been able to do just in your own personal career. So when you do go and launch something, they could already be following you and just been looking for an opportunity to participate. And that's the serendipity part that comes with it. But you've got to be able to provide that opportunity to them.
So let's make it, before we wind up, let's make it really easy for people to get into the world of Wholesale Investor and get familiar with Steve. You mentioned something, and it was a good name. It was like the capital raising brand pieces, or
capital raising brand elements. Yeah.
Brand elements. Can we put a link somewhere near this recording that people can click on and get access to that thing?
I've got a YouTube video that I've done on that. And if anyone really wants to be absolutely bored by me, I've got like 70 different videos about capital raising, like different tips, different hacks, etc. And even just some of it's psychological related as far as the process you go through. But absolutely, I can give you a link for
get
that.
yourself on the Wholesale Investor database. Check out CRISP, CRIISPI.io. We'll write that down somewhere. All right, we learned heaps today from Steve Torso. One thing that I would like to remind you of is his 4-step process, where it's about pulling together the materials, staying ready, always be raising, and get to yes faster. And there was some golden tips, especially in that last bit too. Things that you can say to investors to make sure that they are serious. Check out Emergence. Check out crisp.io. Check out that branding video. Thank you so much, Steve.
Thanks, James. Enjoyed.